Everybody, we're back. It's Mercury-Square. We have another video. It's sort of a different type of video today. We have a special treat. As you'll see, we have a third member on the video. He's our special guest, Eli. He's going to give us a brief introduction in a second, but let's just quickly go over the disclaimers again. This is not financial advice. All investing incurs risk, and there is substantial risk of losses. So these are not recommendations again. So Ali, introduce our friend.
Sure. I want to introduce one of my close friends, Eli Lustgarten. He's a senior analyst in strategic finance and mergers and acquisitions at Loan Depot. Basically, we asked Eli to be a special guest on the today's episode, and basically talk to us about one of our core positions, which is TradeWeb. He's going to basically break down TradeWeb fundamentally and give us his thoughts on how the company is doing, and share with us what he knows. So I'm going to hand it on over to Eli. Why don't you tell us a little bit about us, and then we'll get right into it.
Sure. Welcome, everyone. My name is Eli Lustgarten. Like Ali said, I'm a senior financial analyst for Loan Depot, working strategic finance and M&A. And they have me on here. Thanks for having me, guys, just to break down TradeWeb and give thoughts on here fundamentally, technically, also from Mark and Ali. So we can kind of move forward and talk about TradeWeb a little bit and give a little background. So TradeWeb is a fixed income electronic trading platform. So these guys have a massive trading platform for U.S. swaps, credit swaps, money markets, things like that. So they're a massive company. They're probably about 20 billion market cap or so, and they've been trending really nicely the past month or so. So we just wanted to break this down fundamentally, starting with kind of these key growth initiatives from their latest earnings. So kind of showing here, there's a lot going on this slide.
Eli, you know this.
What's that?
You can break this down because,
Yeah,
and kind of
break this down.
This is your thing. So, this kind of will help the viewers, on how like a real financial analyst, especially with you being in strategic finance, mergers and acquisitions, this is what you do for a living, right? You break down companies, so how you do it, and, people get a glimpse of it. So.
Yeah, I think the biggest driver for this company itself is kind of showing market share and average daily volume. So here, these are just kind of the key growth initiatives that we have here with different sectors. Starting in the top left, you have interest rate swaps, top right, U.S. Treasuries, bottom left, cash credit, and bottom right, global ETFs, institutional. So you can kind of see how those graphs trend, and you can see how they've had good year-over-year growth as well as quarterly growth in each of those sectors. So you can see within each one, especially the top two are the most interesting to me. You can kind of see how their market share has been trending at least sideways, if not upwards. So they've had some good growth over there, showing some more volume. So that's kind of a good sign in terms of how these guys are positioned to grow. Especially, they said on their last earnings call, strategically they wanted to expand more to China. So that was a big upside to them as well. So next slide, we have quarterly average daily volume that I just spoke about, and these are those different areas. So like I said, this company is specifically a fixed income electronic trading platform. So any kind of high yield bonds, credit rates, credit swaps, equities, money markets. Like I said, that's pretty much their biggest driver. So you can kind of see quarter over quarter, especially year over year as well, they've had some nice growth in rates and credit. So I think those are the biggest areas that you're going to start seeing some decent volume. Additionally, Trace, which is the acronym for where all these mortgage-backed securities assets are traded. I don't know the name of it off the top of my head, but that's where it's all facilitated and and taken care of, and that overall volume has kind of trended sideways. And since it's kind of trending sideways overall, Tradeweb has kind of captured a lot of that market share a little bit more quarter over quarter. So I think that's a good sign for Tradeweb, and that's kind of what's been going on, and that's why they've had a nice bump since their Q3 earnings call.
So
Moving over.
Eli, can we talk about their business model? How exactly does this company drive a profit to their bottom line? So from my understanding, and you can please correct me if I'm wrong, which I'm not sure if I am or not, they're essentially like a liquidity provider, right? Where they just provide liquidity for these instruments to trade. Is that correct? And then they just collect a fee.
Yeah, so they obviously have a lot of their revenue. I think 55 to 60% of their revenue is transaction based. So there's the transaction fee side for using that platform. Then you have the commission side, which is a little bit, which is more on the retail and wholesale side with different brokers and things like that, and then 10% others. So yeah, you're spot on with that, and that's kind of how that's broken out in terms of sales. That's kind of how they make all their revenue.
Okay. And then in terms of market share, are they kind of like the industry leader for what they do? Because I off the top of my head, I can't think of a company that kind of operates in the same way that Tradeweb does. Just from what I was reading, right? And I didn't really read that much, but how much market share do they really have? And is there anybody that is kind of like they're equal or maybe even bigger than them?
Yeah, so there's a other company out there called Money Market Webs, I think it is. Ticker is MKTX. Please, don't quote me on that. I can't remember the name off the top of my head, but that's another competitor of theirs. They're pretty much the two guys that go head to head. Combined, I think their market share is probably anywhere from 25 to 35% of the market. So those are some pretty big companies that compete with each other, trade at somewhat similar multiples. I think that Tradeweb is a little bit bigger in terms of market cap, but that's a similar competitor for them.
So apart from those two, the rest of the industry is pretty much fragmented, right?
Yeah, I think it's pretty fragmented. There was some research out there saying that there's going to be some more competition coming in as innovation continues to grow. There's more cash that more influx of cash in technology that's causing that kind of growth and causing more penetration into the market from other companies. So I think we will start to see that, and maybe you might see a little bit of a loss of market share for Tradeweb, but I think near-term wise, I wouldn't say too much is going to happen.
Okay.
So who would be like their biggest competitor that would be coming in, like kind of like a Charles Schwab, like another broker dealer that's trying to get into the same business as them, like a smaller broker dealer? Schwab just bought TD Ameritrade, or would it be, another company that's kind of trying to do the same thing that they are?
Another company, I think MKTX is the only one that I can really think about that's competing with them at the moment that's large enough. I don't know any off the top of my head. Mark, is there anybody that you've researched?
No, that's why I asked, right? Tradeweb, they're not really a broker dealer. They just facilitate transactions between mostly institutional investors, right? For like you said, credit, money market, equities, all these things. But they're not a broker dealer, are they?
Do they have that side of the business? Do you know, like if they do broker, do they do the same type of stuff that your TDs and your like other broker dealers are, your Fidelities of the world? Or
are we talking about MKTX, or are we talking about Tradeweb?
Tradeweb.
I mean, these guys are pretty much they do commission-based stuff. So about 20-25% of their revenue is somewhere around there. So I think they are somewhat broker-based. So with their new acquisition of the new NASDAQ fixed income business that they just bought, maybe they just closed in June. I think that was a big piece to service their wholesale side, so more of their broker side.
So that's actually, you brought up an interesting point. So I don't I don't really know how to read these charts, right? Like I know how to analyze the graphs a little bit, but from what you've read, has TradeWeb grown because of mostly acquisitions, or are they kind of like driving internal growth, or is it both, or is it a little bit of both, or what?
I think it's a little bit of both. So I took a look at their M&A history through FactSet,
Mhm.
and since 2013, they've had a good amount of acquisitions, maybe about 8 or so. So
Okay.
they've definitely acquired a few companies here and there. Definitely, and have also sold a few. So I think net they probably have like 5 or 6 companies under them now. But I think it's a little bit of a conglomerate of a company at the moment.
Nice. All right, cool.
Alrighty, you want me to move to the next slide?
Sure.
All right, buddy.
And you guys can hop in anytime you want. If you have any comments or something that you'd like to mention to any of the viewers, that'd be great.
Yeah.
So here's like some quick charts for actual sales, which is in millions. Then we have EPS as well. Just wanted to point out all of the actual numbers are in blue, and anything in brown is actually consensus from Wall Street. So you can kind of see how sales has been trending quarter over quarter and year over year, and sales are quite strong. I mean, for Q3 they had their best quarter within the last 2 years, as well as in the prior 2 quarters as well. So their sales are still trending strong. Going into 22, they're hitting close to 300 million in sales in Q1 even. So I think their projection is pretty nice. That's why I kind of like this company as well. Going on to EPS in the bottom right table, their EPS has grown nicely. They've had great earnings. Net income has increased quarter over quarter. They've kept their expenses pretty flat. Not too much expense as a percent of revenue, and they've just been daily volume, so they've been doing great.
Yeah.
Going on.
And yeah, no, I was just gonna add, Mark and I, when we, were kind of, we looked at the high level fundamentals of TradeWeb, and that's what we looked at. And one thing that we did see was, sales were growing, earnings per share, especially Ken Slim talks about, right? You want to see growing earnings per share, year over year, quarter over quarter. So, that's one of the basic fundamentals that we looked at, and those were really solid for TradeWeb. So I just kind of wanted to add that, there as well. So, all right, move to the next slide.
Sure. Yeah, this one, there's definitely a lot of data in here, but I kind of just want to show the key items. And on the right side is quarter over growth, and just highlighted that through color scheme, so you can kind of see where they've had the most growth within the last couple of years. So, and then on the left chart, you can kind of see I've highlighted stable sales, EBITDA, net income, operating cash flow, free cash flow. So, I mean, like I said, they've had really nice growth. They obviously had a little bit of a hiccup in Q2 of this year, dropped a little bit in sales. I think that was just relative to just average trading volume that dropped a little bit in terms of mortgage-backed securities and assets being traded, and then it picked right back up over in Q3. So just a few highlights over there, and then going down the free cash flow, looking at them for the last few months. I mean, they have nice cash there. Highlighted that their investment in the NASDAQ fixed income business that they bought. So I highlighted that in the red boxes, that they bought it for about $190 million. It was originally part of DealerWeb, which got bought out by Citi now the same time last year. So they just needed a piece of their business that would fit the wholesale sector. So I think that was their strategy behind it. And overall, I mean, they don't really have that much debt either. I haven't seen that much. So there's just overall good fundamentals, nice growth. They've kept expenses quite low quarter over quarter in comparison to revenue, and it's just very solid consistently over the last year or so.
Super solid. You think anything could mess up their balance sheet? I mean, their balance sheet's it's tremendous.
Right.
Yeah.
That's what I was going to ask you. Did you see anything under the cracks, that's a little concerning?
Yeah, I think if we go to slide 9, which was interesting to me, is I highlighted in red, but you can see goodwill and intangibles, which a lot of these tech companies or a lot of these just fintech companies, trading platforms, they have a lot of goodwill, but this one specifically had a ton. So if you look at the bottom, you can see what that percent of total assets is, and it's anywhere from the mid 60s to almost 70 range. So I would have to take a deeper dive and maybe tell the viewers next time what exactly is in all that goodwill and intangibles. But I thought that was super interesting to see, because if you were to obviously take that away, their balance sheet would be completely different.
Mm. Right. Yeah, it's very interesting.
And yeah, I think another thing. What's that?
That was a good find.
Yeah.
Yeah. I think another interesting thing is I didn't really see any notes payable in their total liabilities. So if you kind of look in that section, don't really see anything payable that's supposed to, maybe it's hidden in a different line item, but I didn't find anything. And they do have a credit funding facility of about $500 million that's undrawn at the moment. So they do have that in case they do want to make any kind of other acquisition or any kind of any kind of repurchase, which I'm not sure if that would really happen for them using that kind of debt. But yeah, I think those two were the most interesting finds, and overall, it's just super solid cash as well at the top. I mean, it just continues to grow and grow, and that net income obviously is helping that number substantially.
Right. Yeah, and I think thank you, Eli. This was really really good. And I don't know. I think this was something that I was asking you about earlier. Was in terms of 2022 projections, and I know that's tough. A lot of that data is not out yet. Especially as you probably saw today. The Dow took a big hit, and kind of see the indexes. You're starting to see a little bit of selling pressure, especially with the new Omicron news, or however you want to say it. But do you have any kind of, and I know we're in the game of not predicting, because that's what CanSim always talks about, is you want to but as best as you can, from what you've seen today as the balance sheet looks like, and for future growth, how does TradeWeb look like, maybe 6 or 12 months from now? I mean, from what we're saying, fundamentally they're very strong, and I think they will continue to grow. And from chart specifics, right? Especially Mark and I, we're pure chart readers, and that's where kind of our expertise lies. TradeWeb looks, and I was gonna show it on Market Smith, just looks unbelievably good. You're seeing this quarter over quarter, just number of funds that are kind of getting into TradeWeb is unbelievable. And as we talked about, there's really not a lot of competition for them right now. They pretty much kind of run the market, and as long as you don't see anyone coming in their space, I think they definitely have the chance to grow. Sales have been growing for them as well. Their EPS rating is 91, which is unbelievably good. Composite rating in the 90s. Everything fundamentally here looks solid. And as you can see, year over year earnings per share is growing. 2020 was 131, 2021 163, 2022 estimated for 187, which is amazing. So definitely seeing good increase right there. So
Yeah, I totally agree. I think they have a ton of cash on hand, just under $900 million at the end of Q3. That's a lot of money just
right.
laying around. So they definitely have that use of cash to go buy somebody else, to make that acquisition if they need to. And then they obviously this past quarter they had about 14 million in repurchase. So that kind of shows the strength and the confidence they have in their share price to buy back some shares and their return on equity for investors as well. So, and they continue to have a solid dividend as well. They've been paying, I think they've been paying it out for this whole year, if not also last year as well. So they've continued to keep their dividend, keep their repurchases, or they've, I think, 2 quarters of repurchases and then a strong cash balance. So I see. I mean, from the looks of the chart, from the looks fundamentally, I mean, I personally like it.
It's a buy, yeah. And with Mark and I, as we're kind of rebuilding our portfolio for 2022 and how we want it to look like, we're looking at some core positions, especially, and our core positions, are going to be 5 or 6 names that are going to be, take up a big amount of our portfolio, and this is definitely one of them, or is a contender for our as a core position. And that's why had you break it down for us fundamentally, because the chart looks good, and we have the high level fundamentals, but kind of wanted to see if there's anything in the cracks that we're missing. So
no, I think so. I mean, I guess from your guys' end, what do you see going forward in terms of momentum, trading wise, anything for the viewers that in terms of reading these charts?
Yeah, and one thing that I like about TradeWeb, especially within the volatility that we've had in the last 2 weeks, usually your top tier names end up staying doing pretty well during kind of fragile time. So today basically IBD changed the market into a market under pressure. And it was just changed today. The Dow basically sold off after hours, and we'll look at it right now. Let me pull it up. But the Dow on the weekly, just one full candle below the 10, kind of closed below the 50, which is a little concerning. So over the last, I guess 4 weeks, we've seen a lot of big heavy selling in the Dow. So that's something to kind of watch. And TradeWeb has been doing really well, and especially even the S&P, right, and the Nasdaq. We're definitely, I mean, this is something to watch for. I don't know how concerning it is, but can't really predict the future. But this is a good time and from what we're seeing, a lot of funds are starting to take profit, move to cash. A lot of the mutual funds are starting to go into your fixed income assets, moving over into bonds and other kind of commodity based kind of flatter positions. So and you can see it, same with the Nasdaq. There's the Nasdaq's still kind of holding up a little bit better, but still it is a little concerning. So a lot of people are moving to cash, and that's what we're seeing. And TradeWeb is still holding up pretty good. So that is it is a good long-term play, and that's something Mark and I and if technically it falls below a certain level, we'll have to cut it loose, but for now it looks fairly solid. And Mark, I don't know if you had anything to add for TradeWeb.
Well, I had one last question. I almost was tempted to ask it once we got off the air. Eli, what do you think is a fair price to earnings multiple for TradeWeb to be trading at, given the red flag we discovered in the goodwill section of their balance sheet?
I mean, I think their earnings is more on their adjusted net income or their or their net income. So really the P multiple is obviously current share price divided by their net income per share or adjusted net income per share. I think they're obviously trading at a multiple that's extremely high. Whatever that number is, about $96 divided by $1 and something. So their multiple is quite high. I think they just have a lot of momentum at the moment with how they've been just how they've been performing. Their volume has been pretty good up until these last few weeks. So I don't know. I'm not really sure where to put them. I think we would have to I would have to do a little deeper of analysis and put some comparables together, some comps tables, and see how that turns out. Maybe that's something we can do next time around and kind of compare companies, but I'm not sure off the top of my head what they could be really trading at.
Nice.
Any thoughts?
All right. Well, that's your answer, folks. I guess we'll call this a wrap. Does anybody want to say anything?
No, I just thanks Eli for kind of coming on, our special guest, and breaking this down for us. It was really nice to kind of have that experience that you have, of doing kind of the fundamental analysis. And I know, this is kind of your day-to-day job on a lot of companies that you do this for. So cool to kind of have your expertise and kind of break it down for us. And thank you.
Yeah, thank you guys so much. It's fun. This is a lot of fun. So appreciate you guys having me on here and just talking stocks fundamentally, technically. So it's a blast. Thank you.
Yep. And if any of you guys want to reach out to Eli, here's his name, Eli Lustgarten. Reach out to him. Real cool dude. Really good at what he does, and he'll take care of you guys. So I think any closing thoughts, Eli, Mark, before we end the episode?
Oh, that's yeah, you pretty much nailed everything.
Yeah,
Right.
I think I'm all set.
All right, guys. So that does it for today. Mercury-Square out.